Hi everyone, welcome back to Corporate Decoder. Today we're diving into a juicy merger, and let's just say someone's expanding their empire faster than you can say mortgage-backed security. You'll be surprised who swallowed who. So, Rocket Companies, known for Rocket Mortgage, just bought Redfin. The real estate company, think of it as a mortgage giant getting its hands even deeper into the home buying process. What does this mean for the market and for you, the potential home buyer or investor? I'm going to break it down. But first, if you're into getting the real scoop on corporate happenings, hit that subscribe button and join our Discord community in the description below to chat with fellow finance fans. The deal officially closed on July 1, 2025. Rocket Companies finalized its purchase of Redfin. Basically, Redfin is now part of the Rocket family. To pay for this merger, Rocket issued a whole bunch of new shares of their stock to Redfin stockholders, about 103 million shares. But the story doesn't end there. Redfin had some existing debt in the form of convertible notes. Think of these like loans that can be turned into stock later. Now that Rocket owns Redfin, they are also responsible for these debts. Specifically, there are notes due in 2025 and some due in 2027. If the holders of these notes decide to convert them into Rocket stock, they'll get a set amount of shares for every $1,000 they convert. The number of shares is subject to change if certain things happen. Also, if things are going well for Rocket, the company might choose to just pay off these notes. Especially if Rocket stock price is high, they can force note holders to convert. Note holders can essentially force Rocket to buy back debt under some specific period. This is when Rocket stock is doing well, or when there's a big change in the company, or if they get called for redemption. The most amount of shares that could be needed to be issued upon conversion of the notes is a little over 6 million. But wait, there's more. To strengthen their position, Redfin is now guaranteeing some of Rocket's existing debt, which are some bonds. These bonds were originally issued by Rocket and Rocket Mortgage. Now, if Rocket can't pay those debts, Redfin is on the hook. So Redfin and the mortgage wing of Rocket will co-guarantee Rocket's obligations. Now let's talk about the moment the deal closed. Redfin officially became part of Rocket. When the deal finalized, Redfin shareholders got 0.7926 shares of Rocket stock for each Redfin share they owned. It's not a one-to-one ratio because Redfin's business is not as big as Rocket's. Even Redfin employees could get a piece of the action. Their stock options and other stock-based awards were converted into Rocket stock awards, so everyone gets a little slice of the Rocket company's pie. Here's where it gets interesting. Since Rocket took on Redfin's convertible notes and Redfin is guaranteeing Rocket's debt, this is essentially creating new financial obligations for Rocket as a whole. It's like adding more weight to the company's financial balance sheet. Remember those convertible notes? Rocket might end up issuing even more stock if note holders decide to convert their notes. These sales of stock haven't been officially registered with the Securities and Exchange Commission. This is not really a big deal, however. I wouldn't focus too much on it. To let everyone know about the merger and the completion, Rocket put out a press release and it is attached to this filing. For more financial nitty-gritty, we can always look at Redfin's past financial reports. So we're incorporating Redfin's December 31, 2024 financials, as well as their first quarter for 2025. So let's check out the numbers. Starting with the unaudited pro forma condensed combined balance sheet as of March 31, 2025, basically a combined pro forma of the two companies together, as well as the unaudited pro statement of income or loss for the 3 months ended March 31 and March 31, 10B25. And for the year ended December 31, 2024, if you'd like to go into greater detail, all the documents are here as an exhibit to. Now, let's discuss if this merger is a good move. Rocket is expanding into real estate, which is generally good because it's adjacent to their mortgage business. However, now it also takes on the obligations of Redfin and guarantees some of their debts. So why did Rocket buy Redfin? Well, acquiring a company like Redfin could give Rocket a lot more control over the home buying experience. Think about it, they already handle the mortgage and now they'll have a large real estate and home listing business. This could attract more customers and boost up the bottom line. Scroll forward, looking Eki statement scroll finally. Take everything in this video not as fact, but just the company's words. So you should do your own work before making an investment. Alright, that's our breakdown of rocket companies acquiring Redfin. This is a good strategic move, however, only time will tell. The housing market is rocky right now. Will it be a boost for a mortgage company or will it drag them down? What are your personal thoughts on this purchase? Let me know down below. If this information was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.